Joining us for this discussion are Yang Berhormat Tuan Liew Tong, Deputy Minister of Finance, Encik Ahmad Zulqarnain Onn, Chief Executive Officer of the Employees Provident Fund, Sri Munir Majid, Chairman of the Institute for Capital Market Research Malaysia and President of the ASEAN Business Club, and Dato Sri Wong Siew, President of the Malaysia Semiconductor Industry Association. Sri Munir Majid, Chairman of the Institute for Capital Market Research Malaysia and President of the ASEAN Business Club. We're waiting, Sri. Thank you for joining us, Sri. And of course, moderating this session is Shahril Hamdan, Head of Southeast Asia and Managing Director of Bullhound Capital and co-host of Keluar Sekejap. Over to you, Shahril.
Thank you. Assalamualaikum and good afternoon. Not always easy to follow the Deputy Prime Minister and Minister of Finance, but that's what we will try to do here today. Beginning with me maybe introducing people on this panel, which I'm sure you're all very, very familiar with. We've got Yang Berhormat Tuan Liew Tong, Deputy Minister of Finance, Encik Ahmad Zulqarnain Onn, CEO of EPF, Sri Munir Majid, our host, Chairman of ICMR and President of ASEAN Business Club, and Dato Sri S.H. Wong, Dato Sri Wong Siew, President of the Malaysia Semiconductor Industry Association. And I think no surprise, listening to the earlier sessions, that a lot of the focus is on this industry in particular, in semiconductors. We've all heard the numbers, we've all heard the stats. Approximately 13% of the outsourced assembly, testing, packaging is Malaysian. 20%, by some telling, 20% of all chips that end up in the US go through Malaysia. And yet there's a disconnect. There's a systemic under-mobilization of domestic capital into this country's, arguably this country's most strategic industry. Semiconductor companies listed on Bursa Malaysia carry a combined market cap of about 40 billion ringgit, which barely accounts for 2% of the total equity market capitalization of over 2 trillion ringgit. Of all E&E investments over the last 5 years, 96% is classified as foreign, only 4% classified as domestic. The National Semiconductor Strategy is a step in the right direction. Lofty targets, creation of at least 10 semiconductor companies that are doing advanced packaging, design, with revenues over 1 billion ringgit, pipeline of 100 other such companies. And this is my favorite stat, a total trained semiconductor engineering workforce of 60,000 professionals. So lofty ambitions. But by that same document's own telling, to achieve those targets, we need 500 billion ringgit of investments. And only 25 billion of that is meant to come from government. And for context, the total FDI, DDI of last year was just over 400 billion. So lofty targets, but also not immediately obvious how we connect between that 500 billion target and this underwhelming, shall we say, domestic capital market participation. Against that backdrop, the ICMR published research recently called The Future Engines of Growth in the Capital Market, thematic study on financing the semiconductor industry in Malaysia. I read that document a couple of days ago. It's quite impressive. And if I were to distill it, there's basically two types of interventions that the document and ICMR proposes. Number one is the acceleration strategy, which is basically converting existing industrial substance into capital market participation by way of partial or secondary listings in Malaysia-based MNC operations or strategic business unit carve-outs, dedicated listing readiness pathways for local semiconductor companies. Second part of the intervention is what they call a greenfield strategy, which is, as the name suggests, oriented towards the medium and long term. The proposed instruments include listed closed-end growth funds, quite interesting, see whether Azo agrees, modeled on business development companies, or BDCs, credit-enhanced bond and sukuk structures, business trust vehicles, and the mobilization of GLICs and development finance institutions as catalytic co-investors. So really the panel today is to think about how we address this, like I said, underwhelming domestic capital market situation when it comes to this industry, and also I guess to engage a bit with the research that ICMR had published. I want to begin with the Deputy Minister, YB Liew, something a bit broad about semiconductor. The story is often told as a success story, but there's also a version of that story which is a little bit less exciting, which is that we are a host economy. We're a fantastic host, to use Shahril Hamdan's analogy. I don't know if he's in this room. He calls it the hotel economy, where basically the workforce is here, the factory is here, the companies are here, but the IP, the ownership of the IP, the balance sheet upside, all rests elsewhere. So what does it mean in terms of practical policy terms to move from a host to an owner type approach?
Thank you, Shahril. I like what Hisham said, and I think this is exactly what we have to deal with. First of all, not just in Malaysia, but even in Singapore, I'm now reading that Singaporeans are now asking why Singapore hasn't nurtured a Samsung. Think about this. Singapore, Penang, Taiwan started semiconductor industry almost around the same time, between 1972 and 1975. But today, Taiwan has TSMC, Korea has Samsung, you have Huawei in Shenzhen, and Shenzhen only started semiconductor industry so much later in the 90s, and started by Malaysian engineers. But Singapore and Malaysia do not have a Samsung, we do not have a TSMC, we do not have a Huawei. I think this is a question that we will have to deal with. We will have to now ask ourselves what to do and what's next. What is in our favor is that for a long period of time, between 2001 when China joined WTO, until COVID, Malaysia was bypassed. There was no need of Malaysia in the global supply chain. We were doing low-level stuff, but there was no need for Malaysia to to go into more sophisticated stuff because China was there. But today, we have moved from just in time to just in case. We have moved from the pursuit of efficiency to the pursuit of resilience. And this is where Singapore, Malaysia, and Vietnam becomes very interesting in the semiconductor sector. What we have to do here, I think, is number one, we should see ourselves not just as a trading nation. Malaysia should see ourselves as a technology nation. But we don't have to reach the top immediately. We do not have to go for the top tech. We should see Malaysia as the indispensable middle in technology. Think about this. I was in Detroit 3 years ago, and Gina Raimondo, the then US Secretary of Commerce, told us that when Malaysia shut down during COVID, Detroit had to shut down. So we should see ourselves as the indispensable middle and build our capability and build companies in Malaysia, both MNCs in Malaysia, encouraging them, arranging opportunities and incentivize MNCs in Malaysia to list and to participate in deeper collaboration with local supply chain, but also at the same time see Malaysian companies as future technology companies, and more importantly, see Malaysian companies as future multinationals. I think we are very much attuned to this idea that we need FDI to drive the economy. But it is time for us to also imagine that in the next 10, 15 years, there will be Malaysian multinationals going around the region, going overseas to play an important role. And where can we play? I think the semiconductor industry has always been vertically integrated globally. We can continue to do so, and we should continue to do so. We should go into advanced packaging. We should do a lot more IC design. But at the same time, I think it is also important for Malaysia to fortify the middle, to proliferate the capability that we have already have from the semiconductor industry, the equipment side, the other type of technology, to proliferate our technological capability from semiconductor industry to medical devices, to agriculture technology, to defense industry. Defense requires chips. Agriculture requires agriculture requires equipment. How do we think of ourselves as a technology nation, as the middle, indispensable middle in the global supply chain? I think this will be the future for Malaysia. The last point is, the middle doesn't mean that you're not good. The middle, think about this. Jensen Huang was selling games just a while ago. So how do we create many more Malaysian companies or companies listed in Malaysia, deeply rooted in Malaysia, headquartered in Malaysia, doing R&D in Malaysia, and from Malaysia expanding to the region? I think this is where we should go. And we should imagine that we are the Korea of the early 2000s. I mean, China is a different ballgame altogether. We will not be a China, but think about the possibility of Malaysia being the Korea of 20 years ago, or 25 years ago, or Taiwan 15 years ago. I think we should see ourselves that way.
Zul, the Deputy Minister speaks of using semiconductor sector to turn this country into a tech country. Talks about how we should celebrate and enhance local semiconductor companies. And the ICMR research, as I had mentioned, says a lot about how we bring capital to these companies, whether it's local or MNC spin-outs. It's got a lot to do with how we help list them. But EPF is not a developmental agency. It has a fiduciary obligation to members, all of whom are in this room. So when we say that Malaysian institutional capital, as we always do, should anchor the semiconductor sector, where's the line for you between national strategic investing and simply making good risk-adjusted investment? How do we turn this from patriotic capital to investable capital?
Yeah. So thanks for the question. I think before I even attempt to answer that, I think it's just useful to step back and just reflect on where we are in the history of technology and the history of semiconductors. I think certainly we are at an inflection point where there is a step change in technology that is happening, in particular artificial intelligence. The world has been digitizing for quite some time, even before the ChatGPT moment. Then we've got the ChatGPT moment, and since 2022, we've just seen this rapid advancement and innovation and scaling of large language models in particular. And every single business leader in the world is now thinking, talking about, contemplating, how do I deploy artificial intelligence into my business workflows, right? And in particular, again, drilling down a little bit, I think circa December 2025, we've also seen a step change again with the release of Claude Code and what both Opus and GPT 5.4, 5.5 can do, where it is, I feel that it has reached a tipping point where it is truly being able to do work that a human being used to be able to do. So in terms of our own workflows in EPF, we are now seeing that some of the work that has been done by humans that takes a certain amount of time is now being able to be done by humans. So we're not taking the human out of the business process, but something that used to take 7 days to do, we can do it in 1 day. A good example of that is when we diligence a private equity fund. So you get access to a data room, you have a whole list of documents that you need to go through, hundreds, thousands of pages, financial models that you need to go through. When your boss asks you to do it, in the past, you probably say to your boss, I'll come back to you. It's Monday, I'll come back to you next Monday. And you probably have to work through the weekend to do it. I think we are seeing the advent where your boss asks you to do it at 9 a.m. and I can get 50% of the investment committee paper done by 5 p.m. that day, right? So it's really compressing productivity. And I think we're still at the front end of this technological change, and we expect to see this improve over time. And I'm also cautious to say that I do not believe, at least in our context, that this is going to take over jobs from people. I think what it's going to do is it's going to augment people in such a way that you're going to be much, much more productive than you were before. I think an analog to that would be when electronic spreadsheets first came out. I think a lot of people were very skeptical about it. People were saying that, you know, accountants are going to be dumb because they don't have to count anymore. But the reality is we don't question somebody who tries to sum up 1,000 rows. Right? We don't say that you are dumb because you actually believe today that that's actually the more productive way of doing it rather than trying to count with a calculator 1,000 numbers. Right? And you have trust in the system that this is accurate. So at some point we have to move to, is this system accurate as well? The reason I bring this up is, therefore, I believe that, and a lot of people do believe, so I'm not unique in this, that the demand for artificial intelligence and the demand for tokens, essentially, is going to grow exponentially for a long period of time. And then we then need to think about how do you produce those tokens? There's a value chain in producing those tokens. And where can Malaysia therefore participate in the value chain, leveraging and taking on what the base and the platform of technologies that we have today? So for sure, you know that chips are going to get more complex. Process nodes are going to get smaller. We're moving from 4 to 3 to 2 to 1.4 nanometers and beyond. You know that the demand for memory and high bandwidth memory is going to increase tremendously. You know that the chips are going to be stacked on top of each other and you need advanced packaging and so on and so forth. So I think it's just useful to drill down onto where we need to participate. I think there's also a great opportunity, and I was watching this lecture, which was very instructive, that if you think about the internet economy, and if you stack up by layers, hardware, infrastructure, and apps, where the value went for the internet economy, a large part of the value went to the application layer. Whether it is an Uber or an Amazon or a Google, Meta, enterprise software, a lot of the value went to the application layer. Very little value went to the hardware layer because you actually basically use generic servers, right? You did buy Intel or AMD chips, but they were very cheap. I mean, all of us can afford an Intel chip. Very few of us can afford, at least willingly, a Blackwell GPU. So it's sort of V-shaped where the application layer accrued a lot of the value and the hardware layer accrued actually very little of the value, right? So that's why Google is 4 trillion and Intel is only 100 billion or so, right? The question then becomes, is that going to replicate itself? Is the application layer going to be much more valuable in the future? And the hardware layer is going to be less value in the future because it gets very commoditized, or is it going to be the other way around? The way that it is today is actually flipped around, where a lot of the value actually goes to the hardware layer, and that's why NVIDIA is 5 trillion, and the application layer doesn't really exist just yet. Now, that may change over time. So I think it's useful for Malaysia to think about it from a strategic standpoint. How are tokens going to be produced on the thesis that the demand for tokens is just going to go exponential for a very long time as we start implementing AI into our business workflows. Now, stepping back a little bit, I think Malaysia is actually decent enough for technology companies to list. When you look at the multiples of the companies that we have, they're not low, right? Some are in the 30, 40 sort of times PE. We don't have companies that's going to go public at 92 times sales like SpaceX. But of course, going back to basic economic principles, a company that trades at 40 times PE actually has a very decent cost of capital, right? Because the cost of capital is just the inverse of that. So I think the issue is that we don't have enough companies that come to market for us to invest in. So EPF is actually quite a large investor in technology, both globally and domestically. So we own pieces of the NVIDIAs, Microsofts, Alphabets, et cetera, of the world. We also own, I can't remember the exact numbers, 15, 16% of Inari. We own 19% of Frontcan. So there's a wide, there's actually quite broad ownership of technology companies in Malaysia. And we do engage with them, and we always tell them, look, we are very supportive of what you do. If you need additional capital, please come talk to us. Whether it's equity capital, debt capital, we're actually very supportive of the growth of homegrown Malaysian companies. And they're very interesting. Vitrox is a very interesting company. Frontcan is a very interesting company. They are companies with intellectual property. They occupy a very unique space in the value chain. They have opportunities to grow because especially as process nodes get smaller, the need for inspection, the need for cleaning relative to these companies is also going to go up, not in a linear way. Because to clean a semiconductor manufacturing equipment that does 1.4 times nanometer is going to be much more complex than something that did 6 or 7 nanometers, right? So we're actually quite excited about this. So I think equity capital and debt capital is available. So the question then becomes, do you need capital at an earlier stage? Obviously, all companies need capital in an earlier stage. Is that who then bears the responsibility of capital at an earlier stage? So my argument for that would be, and again, let's not argue, let's not make the argument. First, let's look at how different places evolved over time. So in the US, it's very much private capital, right? It's basically founders that have made money, exited companies, and then rolled that money, and then they became VCs themselves, and they provide not just financial capital, but a lot of network and intellectual capital as well. You see places like Singapore, for example, where there's a decent amount of government capital that goes in. So we have to then decide what is the right model for us. Now, if we say that government capital is required, which we have every right to say, then who should provide that, and how do you structure that government capital as well? And I think this is where it's important to then differentiate government-linked investment companies between those that have fiduciary responsibilities to others, like EPF and PNB, and those that have fiduciary responsibility to government, right? So I think they're very distinct forms of capital as well. One thing I like when I see where government capital is being used, it's very clear that the intent is very catalytic. And catalytic doesn't mean I invest as an investor. Catalytic means that I invest with a very clear intent that I'm here to crowd in private capital, right? I'm not here to compete against private capital. I'm not here even to sit alongside private capital. I am here to crowd in private capital. So a very interesting, simple structure is, I think, deployed in Singapore and other countries, is where I will seed a fund. I want more than 2 times private money to come into the fund. I also say that I actually give you a call option to acquire my $1, which you have put in $2, at, say, only 4% interest rate over the next 10 years. So if you deliver 10%, 12% return, actually my capital provides leverage to you to get outsized returns, right? So I think thoughtful thinking about how you structure catalytic capital, and I'm not saying that's the only solution, but I think thoughtful thinking about how you structure government catalytic capital is important, because at the end of the day, you want private capital to come in, because this is a business where it's best run by private capital.
Thanks. That's a very thoughtful response, thinking about how Malaysia thinks about the next generation. It's not simply just the chips, but as you say, how we position ourselves in the context of token demand being infinitely high. Tan Sri, Azul, I think, focused a lot in his latter part of his answer around private markets, early stage investments, and catalytic capital on the part of government. But the title today that we really need to focus on is investment to listing pathway. As chairman of ICMR, but also in your time at the SC, can I be slightly provocative and just devil's advocate, just ask you this question or push you a bit? If I am a serious semiconductor company, and we're focusing here on the first prong of the ICMR research, which says, let's spin out MNC business units and list them in Malaysia, right? So not so much the local Vitrox of the world or Skychips of the world, but more of the MNCs. But if I were to give a counter case, if I am a serious semiconductor company with international ambitions, why would I list in Malaysia? Why not Singapore, Hong Kong, Taiwan, Korea, or ultimately the US? We keep talking about Bursa being a catalyzer, I suppose, a catalyst, and to anchor the Malaysia semiconductor story, but the truth of the matter is we need to ask ourselves, is Bursa deep enough? Is there enough liquidity? Is there enough sophistication in investor base? Valuation, sector expertise to make this attractive, not just to the local players for which that will be an obvious exit route or a listing route, but to the international people, or international companies that the research piece proposes we incentivize.
Thank you, Shahril. ICMR did this piece of research as we try to do research that is a call to action, okay? A kicker. We are not implementors. We identify possibilities, and we ask the question, bridging the missing link. And we try to answer it conceptually, but there are things that have to happen factually. And the main authorities to make it happen factually would be Ministry of Finance, Securities Commission, and particularly Bursa, Malaysia itself. A lot of marketing to be done. So when we talk about 50 years and nothing's happened, only 2% of market cap and so on, you might throw back at us the argument, if nothing's happened in 50 years, why should it happen now? Right? Now, the answer would be, it should happen now because there are shifts, not just in the industry that we're talking about, but in the geopolitical environment. The issues that arise insofar as capital markets are concerned in terms of geopolitics are, will there be a rebalancing from America in terms of markets? Will there be capital trapped in rival geopolitical areas? Will there be this big battle in semiconductors and AI? What kind of chips will be produced? Will the chips be the chips for the large AI models of America, or the industrial AI model of China? And if you look at what we are producing, it's middle level, right? It's largely American, starting with Intel and Texas Instruments and so on. But there are companies that are coming to Penang, for example, which are not American now. You have Yongpo Microelectronics, a Chinese company, in Penang, for example. You have NXP, which is a Dutch company, coming in. Now, these guys, especially the Dutch, the European companies, might be short of capital in their homeland, and they might want to raise capital that can be sort of scooped in our region and our country. So there is an opportunity for those companies to set up in the capital market in Malaysia. But why Malaysia? I'll come back to. And why not Singapore or Taiwan? We'll come back to that later. But there is an opportunity. At the same time, if the rivalry, geopolitical rivalry results even in the American companies not being able to source the capital for expansion like they have now, because there's no free flow from America to this region, they might be looking for capital in our region. So when we talk in our report about unlocking assets from existing companies to be listed, there are possibilities and opportunities from even the old American semiconductor companies. So, changing situation, in the geopolitics and opportunities that may arise. Now, why Malaysia? Why not Singapore? Particularly Singapore. And we know Vietnam is also doing bits and pieces to trying to attract capital to their exchange. So is Indonesia. I don't think Indonesia is a particularly strong challenge right now. Vietnam has got problems in terms of opacity of government. They've got a system which is still communist, and you do not know, what's going to happen next. We have an open system. We are between East and West. We are neutral. Vietnam, for example, has got a comprehensive strategic partnership with China, America, and Russia, all at once, open. But we do not exhibit ourselves as being so, unattached as to have it with everyone, but it's only through policies that we do so. And so we are well placed. Now, Singapore is also well placed, and we have to take into account that Singapore, this comes to our second suggestion in our report. It's a +1 suggestion, the +1. Now, Singapore is on a drive, a dual listing drive, very strong drive. They have an agreement with NASDAQ, the SGX, whereby they have a dual listing requirement that if for companies valued Singapore 2 billion and above, and for as long as 15% of the IPO value is traded in Singapore, there will be a dual listing, and you only need to file the papers for listing once to both exchanges. And there are companies that will do so. And Singapore's attractive. It's got 2,800 foreign fund managers in Singapore. And they got the strong, fund base in Singapore. And Chinese companies, although they've not come to list yet, are coming to Singapore and starting up there to mask themselves from any kind of geopolitical attack in the future by the Americans. So they are a strong competitor in our wanting to achieve +1, right? However, and don't forget, the Chinese also would like to spread their risk. And Singapore is very American-linked. And the NASDAQ link is an American link in their dual listing. Whereas we have no such links, and we can try to have dual listing arrangements with Shenzhen, which has got a market cap of about 7.5 trillion market cap, Shenzhen. Of course, Shanghai is the largest in Asia now. It's over 10, trillion. And don't forget Taiwan, 5 trillion. We should be examining how we can engage particular companies, identify particular companies, and not just talk in general about how to have this dual listing. In Taiwan, for example, there are lots of Malaysians there, as you know. There are Malaysian companies listed on the Taiwan exchange, or Malaysian-owned companies listed on the Taiwan exchange. I know one or two of them. I don't want to mention names, but those Malaysians also looking back at Malaysia. And, and they are semiconductor and AI companies there, looking back at Malaysia to want to try to diversify, and expand, and using the Malaysian market. Now we should identify companies in Shenzhen, in Taiwan, who can link up with us. And Taiwan actually is the strongest semiconductor base, if you like, the epicenter of the semiconductor industry. Jensen Huang goes there. He wants to put $150 billion per year in Taiwan. He wants to have this close link with TSMC, which is the most globally valuable semiconductor company in the world. So we must start looking at Taiwan, looking at Shenzhen, and look about dual listing. I know SC visited China recently. What regulators will talk about regulation, standards, transparency, things like that. They don't market. They don't market. They talk about commonalities to form mutual confidence if you have dual listing. Bursa, on the other hand, can go and say we can do this, that, and the other, and then go to SC subsequently. Can you make it easier for them to be listed subsequently? Because SC will not come out front and say, I'll make it easy for you to get listed, So we have to therefore be proactive and identify specifically how we want to do it. Finally, if I may, we also have a lot of Malaysian rising stars, I've got a whole list of them in my pocket here. Really, a whole list of Malaysian rising stars. People know about Inari and people talk about Skychip and so on, but there are a lot more who are doing lots of things. And one thing that they might concentrate on, I would imagine, is on robotics, chips for robots, delivery robots, what would they need, or chips for EVs. EVs expanding like hell. Power chips, most important thing for EVs. So why not try to get them listed? Why not, if it's difficult to get them listed on their own because of their size and their potential is not so overwhelming, why not think of setting up a technology fund or a semiconductor fund, listed semiconductor fund, listed on Bursa, managed by people who know semiconductors and AI, so that then they'll invest in these unlisted companies and give opportunity for those like EPF who want to be involved in the listing of semiconductor companies. So I think, whilst we may have just made a research report and we do not have the wherewithal to implement, I would like to suggest, when we finalize that report, we will suggest implementation steps as well. Thank you.
Well, thank you, Tan Sri. I think I saw the CEO of Bursa somewhere. I see you, Dato. I feel like you should be out here as well. But I think you would agree, some very interesting suggestions from Tan Sri and from the report. Definitely, you've thought this through. I want to go to Dato Sri as the industry representative, as it were, on this panel. You've heard from the policymakers, the institutional allocator, and the researcher talk through your industry. You're president of the association. This idea that what the sector needs is more investments and more capital. Are we completely off base, or are we onto something?
Thank you very much. Maybe I just go back. I know we are short of time here, but I just go back to right at the beginning. In 1972, we shipped about 230 million E&E exports in this semiconductor. 2025, we shipped 711 billion ringgit semiconductor. In the last 5 years, 2021 to 2025, the approved investments is about 319 billion ringgit, surpassed all the 4 decades of investment since 1972 till 2020 is suddenly about 290 billion plus, 4 decades. So you can see the amount of investment that is coming in. And that is what I think our Minister of Finance too said about confidence, stability of government, friendly government, ecosystem. We have grown tremendously, diversifying from assembly test into equipment, like I believe you just said, and then to many others, EMS and the whole range of semiconductor and E&E industry. So it speaks a lot of big volume about Malaysia, the confidence they have in Malaysia. And just now, I think the Minister of Finance too also quoted the investment by Intel, Infineon, AT&S, and so on, TI, all are putting a lot of investment in here. However, you look at the way we have been growing, we have been focusing mainly on FDI. Our growth for the country in contribution to the economy, mainly from FDI, very little from the local companies. So the question is, why is this happening? We have more than 50 years. If you look at, just now we spoke about Korea, we talk about Taiwan, and so on. They are able to do it. I'll just give you an example of Chengdu. I started the factory in Chengdu in 2004. I think UNISEM is in Chengdu, is out here, John, and doing very well in Chengdu. When I went there, the city is not ready. And I told the governor, they said, if you want us to invest in Chengdu, you got to do all these things, 20 things. I gave it to him. And you know what? They did everything that we told him. So in 2019, I went back, that is 15 years later, they surpassed Malaysia. Surpassed Malaysia, okay? Not trailing us, okay? Why is it that they are able to do it so fast in 15 years? I mean, they built a hospital in, I don't know, 24 hours or 2 weeks, built a bridge. Everything they do at super speed. And today, the whole thing about semiconductor is changing. So let's look at the supply chain that we have. Look at the companies. IC design. Malaysia probably have about 50 IC design companies, maybe 6 Malaysian companies. You look at assembly and test, OSAT, 4 out of so many. Look at EMS, I don't know, less than 10, single digit. So compared to the others, China probably have 1,000. Taiwan will have a few hundreds. So we are talking about a different scale.
So is it
Today,
capital,
with the
is it
change-
capital, Dato' Sri, that's required?
Say again?
Is it more capital than therefore, or is it something else? Is it
Okay, just to summarize for you, making chips is not cheap. We are talking about millions of dollars. We are not talking about start with 1,500,000. We are talking about tens of millions, and then when you go into the factory environment, it's hundreds of millions. So if you want to start, that's already the barrier to entry is already high. So, but today there's already a big shift in technology, all right? With the rise of AI, high computing, high performance computing, advanced packaging, chiplets architecture, photonics, and so on. We are talking about a different ballgame compared to the last 50 years. And since COVID until now, these are all the changes that are happening. So NSS, I know that we targeted on IC design and so on. We have one company, Skychip, is able to do 7 nanometers technology and completed their Edge AI chip. It's only one, I think, probably in Southeast Asia was able to do it. Okay, I don't think they have it in Singapore. But how is it that they can do it? So if you want to, talk about what is the issue that we have that Malaysia needs to do, number one is innovation. Because you want to move from made in Malaysia to made in Malaysia, innovation. 2, development. 3 is technology. We need to acquire technology or build your own technology. Then IPs, intellectual property, is changing, okay, compared to in the past, we talk about low cost, efficiency, and so on, logistics. We are talking about a totally different ballgame, and the barrier to entry is extremely high. And the race is on through the whole world. Okay? India is coming on board. So you heard about Vietnam already, and Thailand is also coming on. So they are pouring a lot of money into it. Okay, US $52 billion for their Chip Act. European Chip Act is 43 billion. China is 100 billion. India, I'm not sure how many billion. But if you invest in India, they give you 70% back. If you invest $1, they give you back 70 cents. So we are in this race of competition, okay? And so the question is then, how do we create Malaysian champions that in this kind of environment? And that is really a tough question. How are we going to do it? Who is going to come up with the money? We just talk about it. But the others, China, the Longsis, or in Chinese is Changxing, in 7 years, they became the largest DRAM company in China, 10th largest in the world. 7 years, okay? And then I asked the CEO who visited Malaysia, I said, how do you do it? How do you raise your money? And he said, I raised 20%, 80% from the government. And they made it happen. Okay, so I think if Malaysia wants to create global champions, Malaysian global champions, Malaysia need a strategy, okay? And we need a strategy on how to innovate. How do you attract the talents we have in the country? They're all mainly in MNCs. They create a lot of patents, IPs, and so on. We are not coming out. So while we want to do innovation, okay, if I just go back into the word that we all use, I believe we talk about the middle income trap that we have for wages and so on. I see for innovation, we have an innovation trap. We have the talent, but it's out there. We have the money, but it's out there. Okay, and how are we going to do it in Malaysia by our own Malaysians, which the talent is there. When the people want to come out to do it, is so difficult. The barrier to entry is very high, and I think we have to answer your question. Who is going to put in the money? Right, I think your question, sorry. Who is going to put in the money? And I think we have the capability, we have a chance to do it, and Skychip has already proven that we can do it. We can do another one, and another one, and another one. Thank you.
Thank you, Sri. We've got extra time, apparently, from the organizers, so that's nice. It's a bit more. Maybe I'm sure you have a lot to add from the remarks of the different gentlemen, but maybe tag on top of whatever you were going to share. Maybe ask you a political economy question, because you're the politician on this, not me. You're the politician on this panel. Dato' Sri Wong mentioned about how, in other countries, just the sheer scale of capital that is brought to bear, not just privately, but also from government, and you compare the 25 billion ringgit, not even dollars, ringgit that we're talking about, the NSS, it feels like a drop in the ocean. Obviously, one of the reasons why government can't put on more than 25 or a lot more is, again, this political economy question, and where is our money being spent? Perhaps the hypothesis is, can we bring the public at large on this journey to understand the significance of this industry? Because it feels like we chat about these things in halls like this where it's not T20, it's T5. But what really we need to be convincing is the mass in this country to understand how important this industry is in terms of jobs, in terms of jobs for their children, for their grandchildren. Can the political class do a better job at that?
Yeah, definitely. I think I'm actually not very keen on giving free money. And I don't think Malaysia wants to compete with China or let's say India in giving free money to the semiconductor sector. What I think we need to do is really to have a national consensus at the political economic level with the GLECs, within the government, with SC, that we want to be a technology nation and work towards investing in technology. We would like to see the people around this room really understanding technology, really knowing the companies, like what Munir said, that you have to know the companies, and that I think is important. Secondly, it is really not just to get this group, but also MITI Maida side. Right? I was formerly a deputy MITI minister. It's really to get them to agree that this is the time for Malaysian companies to grow. And when we reach out to foreign investors, it is not about telling them to come here to do what they want to do, but to tell them to come here to work with the locals, to really put the locals at front and center, and foreign companies that come in, we make sure that they are part of the ecosystem. So after many years of hard work, finally we got the new incentive framework that MK2 talked about, which is basically outcome-based. Because for the longest of time since 1986, we have been trying to attract foreign investors, but we were not putting this whole idea that there must be outcome, and the outcome must be verifiable, very importantly. But the new incentive framework is good. At least that gives us a chance to tell the foreign investors that we want you to come, but we want you to ensure that we grow the local supply chain, we grow local companies, we grow eventually we will graduate. I mean, this whole idea that we need foreign investors is good, but at the same time, we must be prepared to say that we one day want to graduate as a technology nation. So to me, it is also about aligning agencies. We have MIMOS, we have many other agencies on the MOSTI side. Those agencies will also have to come together to do this. So there needs to be a national effort, a national consensus. There needs to be a whole of government and whole of nation effort to channel resources, to design policy, and to focus on fortifying the indispensable middle. I may differ a bit with Siew Hai. My view is free money is not what I'm looking at. Money at the right place, in many ways, convertibles, in whatever structures that we can put in. Secondly, I am not chasing top tech. To me, this is the time to fortify Malaysian capability in the middle. And once you create that whole ecosystem, that channel capital to invest to technology, that the GLC in the long runs are no longer too interested in property, but focus their talent pool on technology, then we, in due course, once we have that ecosystem, that expertise, we will be strong, and when the next wave come, when new things happen, we will be a very relevant technology nation.
I think I've been on panels with you a few times now, YB, and you're quite clear, quite consistent. This indispensable middle, this what I would call choke point influence, and leveraging that to build a proper ecosystem. Maybe go to Encik Zul again, and if you can take off your EPF hat and more of the Zul hat, which I know is a lot more tech fluent and friendly than maybe EPF investments at early stage would indicate. That's a praise on you, not on EPF. One of the questions that I got here is lack of investment in R&D. Any thoughts on that in terms of what we can do as a country?
So one of the things that, I know you didn't ask me this question, but it was asked to MK2 earlier. Like, what is the one thing that keeps you up at night? So I can't really take off my EPF hat. What really keeps me up at night is this problem, and I think YB Liew and I have chatted about this a few times, is what has happened to Malaysia over the past 30, 35 years, where GDP growth has been quite respectable, not as high as Taiwan or Korea, but it is quite respectable. But the P50 wage in Malaysia is 2,700 ringgit, right? And we also have studies where living wage is above 3,000 ringgit, 3.1, 3.2, 3.3, depending on methodology. But more than 50% of Malaysians actually earn less than living wage. So something has gone quite wrong. And I wish that the issue of wage and median wage was much higher in the national conversation, as is the exchange rate, the GDP growth rate, the inflation rate, the FDI numbers, etc. So if you
I fully agree with you.
yeah, we agree on this. But if you think about it, the conversation surrounding how much does the average Malaysian earn actually doesn't surface very much.
Yeah.
And when you do look at the data, it's actually very worrying, right? And I don't have the answer to why it has happened. I just can tell you what we see in the data. And as you can imagine, at EPF, we probably have the best data in the country in terms of who earns what. So I do feel that, going back to the topic of the panel, I think there's a great opportunity today to move Malaysia away from low-cost manufacturing. I think as a closet geek, or maybe not such a closet geek, I'm actually quite excited with where technology is going, because we're actually starting to build things again, right? We went through a very long period of time where we were not really building things, we were building apps, right? And it's just one app after another, and a lot of venture capital money was going into the next app and the next app and the next app. I'm not saying that apps are not good. I mean, all of us depend on apps every single day, minute of every single day almost. But I think now we're moving to where actually we're building things again, right? We're building new types of chips, we're building new types of memory, we're possibly building new types of devices. And I think there's just going to be a huge re-engineering of business processes as well, right? So I think it's quite an opportune time to think about what is it from a country standpoint that we should be encouraged in terms of foreign direct investment, but also domestic investment, but also the conditions surrounding the labor market in the country that actually results in jobs that are far above living wage, right? So if you translate living wage back to an hourly wage, it's actually closer to 30 ringgit per hour. Right? Very few people earn 30 ringgit per hour. Right? You can't earn 30 ringgit per hour working at McDonald's. You'll be lucky to do it, and you'd have to work really, really hard and a lot of number of hours doing it as a gig worker, Grab or whatever. So I think as we think about why we want to do this, so I think the outcome is the same, but motivation is slightly different. I think we want to build high-value technology because we want to give Malaysians high-paying jobs, right? And I think if we move the national conversation towards what is high-paying, what investments come in that results in high-paying jobs, the better we will be. Interestingly, when we look at our data, business services are very high-paying jobs. So the guys that set up in Cyberjaya, that do a lot of business processes outsourcing, for accounting, and all sorts of other things, actually they're very high-paying jobs. They're far above the P50. Now that potentially is threatened by AI, but I'm just giving you an example, like, let's step back and a little bit, why are we doing this? Actually, our motivation to do this must be that we want to create high-paying jobs.
Can I grab the mic to say, I like this so much that what keeps me awake at night as a policymaker is how to ensure that our relatively young population, our median age is 31 years old, which is very young compared to Japan, Korea, China. How to ensure that there's no Gen Z protest here? So Gen Z protest is about wage, jobs, and upward social mobility. And secondly, given that while we are still a young nation, we are going to be an aging nation soon. How to ensure that our people get rich before they get old?
Yeah. No, I think that's fantastic framing from the both of you. Conscious of time, but I do want to finish with the two gentlemen. Maybe go to Tan Sri first before ending with Dato Sri. Bringing it back to this sense of capital markets, I want to put you on the spot again to commentate on Bursa and SC, just to be nakal a bit. Is there not an argument that what ICMR's research missed is the potential for some sort of regional solution? So rather than talk about Malaysia being the area or the exchange for these opportunities that you articulated earlier, that we are pretending that one country can solve it, when really the solution is some sort of, whether it's capital markets union of some sort, some sort of cooperation between exchanges. Have you any thoughts of that?
I think, what we can do, we have actually done research on other things. For example, the silver economy. I think we've spoken and have had contact with EPF on the fact that there are insufficient savings to support life after retirement in this country. So you're asking me what more can ICMR do to ensure that this suggestion of having the capital market have more semiconductor companies listed?
No, I think it's more of an ASEAN capital market solution. If you have any thoughts, an ASEAN level capital market solution.
Oh my God, ASEAN, yes. I think ASEAN is best approached on an 1+1 or 1+2 or 1+3 basis. ASEAN had this arrangement to have a common stock exchange for trade, clearing and settlement, and it was put up, effected among Thailand, Bursa, and Singapore. But it has more or less died a quiet death, mainly because there was some struggle about what system should be used for clearing, whose system should be used for clearing trades. And, and everyone didn't want to move from his particular system. But I think it would help if they could revive something like this and have an ASEAN-wide trading platform, clearing and settlement platform again. This speaks to, of course, one way to mitigate Singapore's go it alone dual listing drive, to say, look, hey, how about us, ASEAN, together? Because Singapore is going to be the chair of ASEAN next year.
Yep.
And it's not likely that they will be open to suggestions to revive, an ASEAN trading and settlement platform, as their dual listing drive is relatively successful. And they want to see how much they can scoop, with this relationship that they have with NASDAQ. So again, you talk about ASEAN, there are tugs and pulls, pushes and pulls, and it's a difficult animal, to achieve any kind of total consensus, but you can work in ones and twos, to try and achieve, some kind. Our semiconductors actually, at the moment, are mainly exported, to US, China, and ASEAN, in ASEAN. And there is good reason, to say, hey, come, let's have participation by your investors in these semiconductors that go out to you. I know time is running out, but ASEAN is difficult.
ASEAN is difficult, that's your headline. Dato Sri, last word from you. Any thoughts on just the industry that you've been in for so many years, and particularly about capital markets and what you want to see happen in the next few years?
First of all, I think I agree with the suggestion earlier, which I also advocate, is to acquire technology through joint ventures and collaboration. I think that is a faster way than we try to build ourselves. So if we can get it either from the Europe, from US, or from China or Taiwan, I think that's the way to go and get money from the capital market or whatever to support. There are other views I think that we can look at from capital market in the sense that when in the MNCs, they tend to consolidate, they tend to expand, and then they will sell off, so to speak, the less so-called strategic business for the company. So I have a case whereby I was running the business for microcontrollers in Intel in the 1990s, and the revenue was $200 million US. So we had everything. We have control of profit and loss, we have marketing, we have sales, and so on. We go visit customers, we develop products, all in Penang. We spent a year in the US and transferred the whole thing back to Penang. The reason for that was that the management says that this business is only 5% pre-tax. I put in the bank at that time the US is 5%. Say, why am I wasting time and wasting resources? So they want to close that business, and we said, why don't you transfer to Malaysia? And so we did that, and then we are able to make 15 pre-tax in the first year. However, they want to spin off this business, and we were trying to work with MIMOS at that time to do wafer fab, 6-inch, and then MIMOS have that. Unfortunately, that did not take off because Intel was too busy building new fabs, and they have no time to go and transfer this technology to Malaysia. But however, I think this kind of, I'm just using this as an illustration because this gives an opportunity for a capital market, can spin off and even take it to listing and raise the money and run it, or do an MBO to run this business. I think even today, as I speak today, there are companies who are also now splitting up their businesses where they focus on the core and then they let these so-called non-core to spin off. I think we should spend time to look at that to see whether Malaysia should take this up.
Yeah.
Okay. One example I can give you was AMD. When AMD decided that they do not want to have any more factories, they want to sell off all their factories, and the factory was in Penang. And that factory was sold to Tong in China, Chinese factory. It just occurred to me, why can't Malaysia buy up? It's assured business, the customer is AMD, and you have the factory here, and so you run your business, you take it to capital market, and then you raise your funds. I mean, I think we should be mindful and be open to this kind of opportunities. And just now was mentioned, the geopolitical tension is giving us, as to quote YB Liew, he said, once in a generation opportunity, it is here. The window is narrowing. So if you don't take this opportunity, soon it will go away. So I think we have an opportunity right now. Thank you.
Yeah, thank you. Those are very tangible suggestions, and I think we've had a really broad discussion from capital markets all the way to the silver economy. Can I invite everyone to join me in applauding the gentleman on the panel, and I'm sure we'll continue the discussion elsewhere. Thank you very much.
Thank you, Shahril, and thank you, panelists, for that insightful discussion.